While global markets are obsessed over AI stocks, interest rates, and the next Fed move, a very different trade was quietly compounding wealth: metals and the metal companies. Let's talk about metal mining stocks and ETFs. In 2025, precious metals stopped behaving like hedge and started behaving like return generators. Gold had its strongest year since 1979. Silver more than doubled. And mining stocks didn't just follow, they multiplied the move. Yet for most Indian investors, some of these opportunities weren't on the menu. Let's talk about the hard numbers. Let's start with what the data actually says. Physical gold ETFs listed in the US like GLD, IAU, BAR delivered roughly 68 to 69% returns in 1 year. Silver ETFs such as SLV and SIVR surged over 160%, but the real acceleration came from mining stocks. Gold miner ETFs like GDX and GDXJ returned between 160% and 175%. Silver mining ETFs went even further, some crossing 200% returns such as SILJ, SLVP and more. Here's a simple breakdown for you. Owning a metal ETF is about price. Owning mining stocks is about profit. When metal prices rise, revenues jump immediately. Cost lag, margins expand sharply. That's why mining ETFs often deliver 2 to 3 times the metals move and why they have usually been more volatile. For example, GLD, which is a gold ETF, gave a return of approximately 69% in 1 year, whereas GDX gave 159% result. You see the difference? What actually drove the rally? Well, geopolitics did not start it. It prevented capital from leaving. Add to that, central banks aggressively adding gold to reserves. Currency volatility reinforcing gold reserves' role. Industrial demand pushing silver beyond its safe haven identity. But Indians missed it. Why? India offers gold exposure, but not global mining ETFs, platinum or palladium ETFs, or diversified global metal producers. Indian investors did not have access to. Now this is where platforms like Appreciate come in. They enable Indian investors to access US listed gold and silver miners, hold platinum, palladium or other ETFs, separate metal price exposure from mining leverage, and invest globally with the benefit of USD appreciation. This is Beyond Dalal Street. I'll see you in our next episode.